Hello world, welcome to Farm the Market. On the Stock Trading Journal series, I share with you some of my trades. I do not claim to have the quote-unquote epic strategy that beats the market every time. I just hope it's a good exercise for me, where I get to analyze some of my trades deeply by explaining them to you, and hopefully for you, by looking step by step at examples of real trades, you might find interesting some of the techniques or adjustments I use on my trades, and this might help you in your journey to develop your own trading skills. This time we will take a look into a trade on Intel. Let's get started. Unlike most of the trades I share in the Stock Trading Journal series, this trade wasn't meant to be short-termed. Actually, this example is from my investing portfolio, and at its inception I was expecting to hold the position for at least 15 months. Why such a quote-unquote long time? Well, I like Intel's fundamentals a lot. The company is often overlooked given the popularity of AMD and other semiconductors companies with more hype around them. During 2021, I tracked Intel looking for an opportunity to get in. Even though I like the fundamentals, the price was too extended for a while, in my opinion. As the earnings reports came in, the stock price started to decline, holding a range that lasted for several months. On October 22, the stock gapped down on another earnings reaction, and the stock price broke the $50 barrier. This was relevant for me because at the time, based on the fundamentals, I had in mind a price target to enter a long-term position on Intel between $42 and $44, so the stock was getting closer. As it often happens, the market digested the earnings announcement for a few more days, and the stock kept dropping. On October 28, the price had dropped very close to 48, and the volume had come back down. So I decided it was a good opportunity to open the position. You might think, wait a minute, you just said you were aiming for a range of $42 to $44. Why act now, when the price is still 10% above the target price? The answer is that for this type of trade you must think in terms of ranges and windows of opportunity, not exact numbers. The price dropped enough, where an options strategy will give me the exposure I wanted with a good risk-reward ratio. So, I decided to buy the 50 to 60 call spread, and to fund that purchase, I sold the 40 naked put, 2 contracts of each option with expiry in January 2023, to give the trade a long time to develop. With this strategy, I get upside exposure if the stock goes up between 4 and 25% with no cost. A margin of safety to the downside of about 16% versus the current spot price, and my worst case scenario is to buy at 40, a stock I'm willing to buy and hold anyway at around $43. Although the strikes seem like nice round numbers taken out of a textbook example, it was just a coincidence. I even got a small credit, but the idea was just to get the cost as close to zero as possible without sacrificing too much on either side. As I have mentioned before, options do not have a linear behavior during their lifespan, but it's always a good reference to look at the possible outcome at maturity to assess how the strategy compares to the alternative of being just long the stock. In this P&L graph, you can see this comparison. The orange line is the stock, and the blue line is the options strategy. The green zone is where I'm better off with the options, and the red zone is where I'm giving up some upside potential. Assuming $60 would be a good target to sell, there's a clear asymmetry in my favor. Another advantage of using the options versus the stock directly is the capital requirement. For this video, I don't care about the details of margin requirements for naked options. That's another topic. I just use the delta to determine how much notional the position requires. After all, if I were to hedge the position, that's how much of the underlying I would have to buy, and therefore, how much of my capital will be consumed. Using options, the capital requirement will always be less than buying the stock directly. Just remember delta will change depending on how the spot price moves. Regarding trade management, since this is a long-term trade, I do not intend to look at it often. I just place 2 alerts in case Intel goes beyond 60 or below 40. Now it's just a matter of waiting. Almost 4 months go by, and neither alert has gone off. However, something else happened in the meantime. The market conditions have deteriorated considerably. If you want more details about what I mean by that, please watch my video When to Play Defense. You can find a link to that video on the upper right corner. Although in that video I focus on short-term trades, the current environment implies every position must be reviewed in more detail. So, after looking into this Intel position during the weekend, I decided it would be better to just close it and take a loss. I still like the fundamentals for Intel, but I see very likely a scenario where the market in general continues to deteriorate and the tide will move most of the boats lower, regardless of their own merits. If this materializes, I see a good chance for picking up Intel at a much better price, even factoring in the loss I will take on this trade. Looking back, what could I have done different? Although, as I mentioned, this was not meant to be a short-term trade. While I was working on this video, I noticed there was a nice window of opportunity during January of this year to take some profits. Perhaps I should have sold half the position once the stock filled the October gap. Assuming I had done that on January 18th, I would have exited the trade completely today and still have a profit. Maybe placing the alerts half the way to the outer strikes could be a good practice for this type of trade in the future. Something else I want to point out is that although I had to take a loss, the advantages I mentioned earlier with the options played out nicely. If I had just bought the stock, the loss would have been twice as much. Well, there you have it. It wasn't a sexy trade, it might even seem boring for some people, but I think it covers many interesting points, so I hope you found it interesting. I hope you found this video interesting. Please remember to like and subscribe. Thanks for your time.